Alright everyone, no long intros in YouTube anymore, so let's get straight to the topic, the footprint chart introduction. Now, whether you are a beginner trader or an intermediate trader, this video is definitely for you. Stay tuned, you might learn something new about the footprint chart. Let's get straight to it. Firstly, what is a footprint? Now we're going to go through these one by one from left to right. So what does a footprint chart include? We have the structure as well as the delta. Then we have how do we actually read a footprint chart. So we have the imbalances and the delta. Also going to explain how the footprint works, so you'll get to that. And then lastly we have the different types of footprint. And these are basically the same as, candlestick charts. You have time, volume, range, delta, etc., etc. So I have my own footprint chart here, which I'm going to use to explain what a footprint basically is and throughout this video. So if you're interested in how to make a professional footprint chart, I would highly recommend that you go watch my latest video. Even if you don't use the same platform as me, you might get some very good tips and techniques on how you actually should make a proper, or how a proper footprint chart is made. So with that being said, let's now talk about the structure of the footprint chart. Okay, so I got my pen here, which I'm going to use in this demonstration. The idea isn't to make this video too long. So if I kind of talk about something very quickly, make sure to write it in the comments if you have any further questions. And if you find this video useful, like and subscribe, please. That would mean a lot to me. Now let's get straight to it. So let's talk about the footprint structure firstly. Now we have the left section and the right section in this footprint which I've made. And technically only one of these is actually the footprint, and it is the left part here. So it is each left portion here, which is technically the footprint chart. The right part here are delta, which I have added, but these are not standard to every kind of footprint. So I'm going to explain the left part first, and then we'll go to the delta. So the way this footprint chart works is it is bid ask. So the left side here is the bid, so these are the sellers, and the right side here is the asks. So this is these are the buyers. So every left row you see is the sell row, whether it's here or here or here or here, those are all the sellers. And every right row you see, those are the buyers. And this is standard to every single footprint chart. Typically every footprint chart is bid versus ask. You can make different types of footprint charts, for example a delta chart, where you would have the numbers would mean different things, but this is a bid ask. So the next thing we have to explain is that each price level has two numbers. So we can see here that on this specific level there was 0 sellers and 66 buyers, and it works the same way for every price level. Very basic stuff. And then we come to the delta. So the delta now is the right number, and this is basically the difference between the buyers and the sellers in that individual price level. Okay, I'm going to repeat that. So for example, in this one we have 0 sellers and we have 66 buyers. So the delta on that price level is going to be positive for 66 contracts. And the same applies for each price level. Now keep in mind that this is unique to my footprint. So when you make your own footprint chart, or you might see other people's footprint charts, their settings might be slightly different. So I'm explaining you how the things work on my footprint. So for this next section, I've pulled out a calculator, and trust me, it says calculator, it's just in my language. So we have the bottom portion here, right here, we have the delta numbers for each footprint. So the one section you see here represents the footprint above it, as well as the delta, by the way, on the right. Don't get these two confused. When I talk about the footprint, technically it is the right or the left portion here. In a standard chart, it doesn't include this rightmost portion. It is just what I've added to my own chart. So let's talk about what the delta numbers here in the bottom mean. So at the top, we have the standard delta. So basically what this means is that if we add all the numbers from the footprint here, we add everything together, all the buyers and all the sellers, we are going to add up to minus 401. So negative 401 more contracts were sold than bought. So that's what that means. So that's what the top number means. Now, if you don't believe me, you can take any of these. I'll actually move my thing here. So you can take any of the footprints here, as many as you like, and you can make your own calculations whether it matches these or not. And I can guarantee you it matches perfectly. So the next number on the bottom here, we have the delta change. And basically this is the delta change between the two last footprints. So here we have minus 401 delta, and here we have positive 71. So that means obviously that the delta changed for 472 positive, because it went from minus 401 to positive 71. So the change is positive 472. Very important to have this setting on, by the way. Then we have the max delta and the min delta. I'm going to explain these simultaneously. So let's take this candle, for example, or sorry, footprint. Technically these are not candles, but it's easy to mix up the words. So basically the max delta and the min delta numbers are giving us the strength of the footprint. Basically it is showing us how much control either side had during that footprint. So for example, in this one it's 71. So it means that the buyers were in control, but only by 71 contracts. Whereas the minimum delta is 252. So that means that they were more in control. They had more control at one time. So then we have the last number here. We have the delta percentage. I'll just pick a random footprint here. Let's use this one, for example. So this footprint here has the delta percentage of 0.16. And there's a calculation we can use to look at what this number actually is. Okay, so I've added one column here. So here we have ask V, bid V. This is basically the total volume of each footprint. And we need this number to look at what the delta percentage actually is. So if we take the delta number here, which is in this case 752. So we put 752 and then we divide that by the total contracts, and we times that by 100, we get the percentage, which is 15. So it is matching basically 16, right? So that's what that means. The delta percentage is the delta from the total volume. All right, everyone, a little addition in the post-production. I was looking back on the video and I realized that my explanation of the delta was maybe slightly hard to understand, especially for beginners. So I've chosen this place here on the markets where the volume is much less, so we can actually talk about the max delta and the min delta with more clarity. So let's look at this footprint here firstly, and we have the delta of 22. Now obviously you can see that the only contracts that happened in this footprint were buy contracts, so no sellers came in. So that means that the delta is coming from all the buyers, and we have the max delta of 22, which matches perfectly with the delta. So to explain the max delta in a very simple way, and the min delta, the max and the min delta are the highest and the lowest number that the overall delta reached in that footprint. So in this one it is 22 because there were no sellers. So if we take this now, for example, we only have the sell contracts, no buyers came in, and we have the delta of 54 and the minimum delta of 54 because there were no buyers. So the delta didn't change at all. And in both of these instances, you can see here that the max delta on this one is -1 and the minimum delta on this one is 1, and that's because there's no buy or sell side contracts on that one. So when the delta, for example, if the minimum delta is +1, that means that the sellers were never in control in that footprint. However, there can still be sell side contracts and the delta or the minimum delta can still be +1, and vice versa for the max delta. Okay, so now that we've looked at the delta and the structure of the footprint, I want to talk about the imbalances, and this is a very important topic, which is also a standard setting in every footprint, or it should be. I believe that there's no good footprint without the imbalances. So I'm going to zoom in a bit so we can actually look at this better. And I'm going to find us a slightly better place. Okay, this is a good place for us, I think. So what the imbalances are the highlighted numbers. So we have 3 in this footprint, we have 3 in this footprint, and we have 5 in this one. And so the way the imbalances work are basically explained by the depth of market, which I'm going to talk about later. But on a side note, I would highly recommend that you watch my video on price action. That would really kind of give an in-depth meaning to how price action works, and you would be able to understand the imbalances also slightly easier that way. But I'm going to explain it for you now anyway. So the way an imbalance works is it looks at each number or each price level like this. Okay, because this is how the price is actually shown in the depth of market. Again, if you don't understand how price action works, I highly recommend you go watch my video on that. That's going to give you great insight. So here we have 102 buyers and here we have 12 sellers. So an imbalance is essentially, the standard imbalance is 4 to 1, so 400%. Now in this footprint chart, I believe it's 3 to 1, and there's some variability, but the standard is 400%, I believe, but I like to use 300. So an imbalance is exactly what the name suggests. It is an imbalance between the buyers and the sellers, and this gives us great insight into what the markets are likely to do next. Now, if you see multiple imbalances in any individual footprint, now this is a bad example. There are much better examples where it's like 400 or 500 and there's like 5 of them in one footprint. That is a very clear indication that price is going to do something next. Like it's gonna go either very hard that direction or it's getting absorbed like crazy. But basically this is, you could say it's an indication of strength, really. That's really what it is. And this is a really important tool to use, especially when you're looking for entries. So an imbalance here could be a confirmation for your own entry, especially when you see multiple of them. So just to sum it up, we have the bid and the ask, then we have the delta on the right, we have the delta numbers on the bottom here, we have the total delta of the whole footprint, we have the delta change between the previous footprints. Then we have the max and the min delta, showing us the strength of each individual side on each footprint. And then we have the delta percentage, which is the percentage of that delta from the total volume. Now, I hope you're not too confused by now. Let's talk about the different types of footprint. Again, you have the time, the volume, range, delta, etc. Multiple different types of the footprint charts. This is a range chart, which I like best. Now, there's a time and place for time and volume based charts, but I don't think it's a good way to make a footprint chart. I think the best is to use a range chart. So with that being said, this section is now complete. So then we have footprint versus candlestick. Now, what are the positives of using a footprint chart over a candlestick chart? And this is not to bash the candlestick chart. We're going to talk about that really soon here. So the strength of the footprint chart, or the effect, really comes from the fact that it can look inside the candlesticks, as we just saw. So when price is moving on a normal candlestick chart, you don't know how strong the move is. And this is the second point. You have no idea whether the buyers are strong or not. You're just seeing the price action. You're just seeing the movement of the price. However, this can be very deceiving. And the final thing which I thought of is absorption. Footprints can actually show you absorption, whereas when people think they see absorption in a candlestick chart, they're just guessing, because you can't see the numbers. To understand what absorption is, you have to understand price action, and you have to see the numbers. Otherwise, you're just guessing. Then we have the depth of market and the footprint. Now, this is a free advertisement. Go watch my video here. The two questions I answer in that video is what is absorption and supply and demand. This is what the depth of market looks like. The footprint chart is, and essentially it is the depth of market, but it's just collecting more data. So essentially it is the depth of market. Basically the same thing, it is showing the same thing. But to really truly understand the footprint chart, you really do have to understand the depth of market. Otherwise, you're not really going to understand why, for example, imbalances are shown in diagonally. You have to learn about the depth of market if you want to understand, for example, that thing. So how to use a footprint chart in trading? Now, in my opinion, footprint charts are mostly used for entries or reasons not to enter. So this is coming back to the strength of the move, which could be a reason not to enter if you have an idea where price is moving to a direction where you want it to go. However, you see that it's weak from the footprint. This could be a reason not to enter because of that kind of indication. Now, also a footprint chart could be used to cut your losses early and let your winners run. And this is coming back to the strength again. When you can see the numbers, you can see the actual contracts that are within the candles, it's a lot easier to trust your own strategy, because there's kind of this gambling element which has been reduced by a lot. When the price is going against you, you can clearly see the strength of the move. If it's very strong, you would be wise to cut the loss early. And then again, letting the winners run. This is every trader's dream, I believe. And then we have looking for absorption at key levels. This could be a good way to enter the market. If you are seeing absorption from your footprint, that could be a confirmation for you to enter. Looking for exhaustion. Many traders don't probably even understand what that truly means. And this is much more visible on a cumulative delta chart than a footprint. exhaustion. I'm not really going to explain what it means in this video. It's basically the lack of strength. So the strength is gone, price is still moving, but it's kind of starting to lag a bit. And this is very visible in the CD, so the cumulative delta chart. So those are some ideas on how you should use a footprint chart. And then we have how to not use a footprint chart. And this is, in my opinion, more important actually. So number one, you should most definitely not create a trading strategy that is based on the footprint. You should definitely not do that because it's not going to work. The footprint chart is mainly used for entries. It does not give you the overall context of the market. So you have to use something else to create your strategy on. Entering blind, chasing the imbalances, chasing the strength. This can be very deceiving when you see 5 imbalances in one candle or one footprint, and then you chase that. You enter because you thought that the price was gonna go, because you saw the confirmation, but however you were wrong, right? Has happened to me. Not looking for higher time frame context. 15 minute, 1 day, 1 week, 1 year, etc., etc. It doesn't matter what the footprint is telling you when the overall context of, for example, the week is off. If those two things contradict each other, I would be more inclined to trust the higher time frame context than what the footprint is showing me right then. Then we have the ignoring the red flags. So if you're ignoring, for example, opposite side imbalances or a weak delta or a lack of strength, that's not how you use it. That's not how you use a footprint. And just lastly, we have some ideas that you should try with the footprint chart. Now please remember, this is not trading advice. These are just ideas. You should probably try them on a simulator, not a live account, but just try them. So when you're looking for entries, you want to see imbalances to the desired direction. So if you're looking to buy, you want to see the green numbers on the buy side. Very obvious. You want to see a delta confirmation. You want to see a strong max delta and a weak min delta. And then we obviously have the no red flags. Very important. No heavy absorption. Price isn't stopping. Okay, it needs to keep going, obviously. When looking to exit, this is very important as well. Look for exhaustion. Again, this can be more easily seen. This can be more easily seen on the cumulative delta. However, it can be seen also on the footprint if you're looking for it. Lack of imbalances, very important. Heavy absorption. Price is stopping like hitting a wall. That's what that looks like. If that happens and you're in a trade and let's say you're losing the trade, you might want to exit or you might want to take profits off. So this is just one example on how you could use the footprint chart together with another chart. So on the left here we have a 15-minute candle chart, and then I've just put a very simple volume profile here. So you could use these two in combination. So let's say, for example, that you are looking for your context on the candlestick chart here, and you know, when you come into an area of interest, you know, we have here, for example, the point of control, and we can see that it's kind of lagging here. So let's go to that place on the footprint actually. Okay, so we are now at the same place where this kind of sideways action is taking place close to the point of control. And let's just look at how that looks on the footprint here. We can see that we have some sell side imbalances. The delta is obviously very negative, and price is kind of battling here. It's not really going up or down. So there's a big fight going on. And we can see here that although the sellers came in, there's no strength really. if we look at the contract sizes here and we look at the deltas, it's kind of weak actually. The strength only lasts about one footprint. That's kind of one of the things you should look out for. If you see if there's no real strength behind the move, you probably shouldn't enter. And in this case, that would have paid off because price did end up going up. And we can see here that we have the buy side strength coming in. We have imbalances going, delta is strong, and all that. Price going up, and then it stales and goes down again. Let's actually look how that looks on the footprint. So we're spending a considerable amount of time at the top here. So there's kind of a battle going on even up here. And this is probably one of those areas where you could see the cumulative delta start to change. So you could see the buy side strength start to diminish, and this would be exhaustion, and that would be a good reason to enter short, to sell the market. And you would be confirmed in the footprint here. We can see that the delta is very negative. Price is going down. The buyers are fighting back, but they don't really have that success. And this would be a good entry here. We can see that now we are really starting to take some steam, pick up some, we have minus 300. This is what I was talking about when I was mentioning the imbalances. This is what you want to see when you are thinking about entering the market. This is what you should be seeing. This is a very clear confirmation that price is ready to really kind of move down, especially when you have imbalances after another. And we have even like very big, you can see here minus 1,000, and the delta percentage is 60%. So 60% of the total volume in this footprint here was sellers, right? We don't have a lot of imbalances, but look at this. 0 buyers, 0 buyers, 0 buyers, 0 buyers. No one's buying, okay? So this comes back to the point of when to or how to not use your footprint. You want to always have that context and the confirmation from the footprint chart. So that's been it for this video. If you enjoyed it, do that and subscribe, and I'll see you guys in the next one.